We're also therefore watching the Indian market, what it's looking like, how it'll open. We're still about 8 minutes away from that. GIFT Nifty futures indicating 25,328. Remember, Nifty had another low. Well, pre-market, it's already gone past GIFT Nifty futures as pre-market is open at 25,344. We're looking at the rupee, which is at 91.56, continuing to weaken against the US dollar. Now, Vaibhav Sanghavi is the CEO of Ask Hedge Solutions. He joins us to talk more about everything that was said by Geeta Gopinath and others, and of course the rupee. I want to just start by asking you about the biggest story, the top story. We had an interview with Donald Trump. The US markets perhaps no longer spooked after Trump climbed down on the EU tariff threat. But India's market perhaps is a different story. Does it continue to get spooked?
Yeah, I think it's an interesting question. And the reason is basically because if you see for the last 1.5 years, one of the primary reasons for the underperformance has not been only the tariffs, but also the kind of valuation it used to trade, the earnings kind of downgrades which are kind of happening, which in my view actually has been starting to turn around from the last quarter, where the earnings have kind of stabilized and is now looking up. At the same time, valuations have corrected, and from a relative basis, vis-a-vis your other peers, we have now come within the long-term average bands as well. So as we think that if the earnings grow for the next couple of years by about, say, 14-15% each, my view is that whether there are tariffs or no tariffs, purely because from an overall perspective, from an exports perspective, any which ways, US constitutes a very small percentage of our total exports. So my sense is I think those are the more important ones to kind of, getting it addressed, which are actually getting addressed, which brings to us some amount of constructive view for the next 2 years.
We're looking at the pre-open to get a sense of how the market is going to react in the next couple of minutes as it opens. I understand your point that the US weight through tariffs, the impact of those tariffs on India is minimal, but it's never been about that. That is considered to be 0.6% of GDP. But the question is the perception, the sentiment. That impact is huge because of that. And you mentioned also that it's about the earnings, and those have corrected. Have they actually corrected as much as you're saying? Because you yourself, as I understand, are still worried that in this year we might still not see those double-digit earnings, and we might be towards, let's say, single-digit earnings, but towards the tens?
No, I think from an earnings standpoint, our relative confidence of getting to that mid-double-digit, kind of numbers is pretty high. And the reason is not only that one sector is doing well. I think when you look at the forecasts, it is very, very broad-based. Now, unlike the previous earning growth stories, which were led by a couple of sectors, this time around, I think right from banking, financials to industrials to consumption, across the board, we are seeing good amount of recovery. Now, this is also because the government's focus in the last 10 years, we also was concentrated on the supply side. As against that, in the last year, in combination of central government, state government, and the RBI, all of them are focusing on revival of the consumption, which is the second big component of your GDP growth. Our understanding is basically that both of these components should continue to do well in the next 2 years, with the base getting much, much more favorable, is where we have relative confidence of broad-based earning revival, looking at a target of anywhere between 13 to 15% earnings growth for the next 2 years. So it's important. And lastly, from your point in terms of the sentiment, of course, I think US tariff, I'm not saying that it is not affected in terms of the sentiment. It is also got coupled with a few other narratives, including your AI trade, your Fed interest rates, and so on and so forth. So all of these narratives coming together has led to some size underperformance, at least in the last 1.5 years, vis-a-vis the other emerging markets, especially China, Taiwan, and Korea.
Since the focus is on Davos, I want to ask you a question about the rupture in the global economic order. Does that order now, the rupture, effectively mean that India needs to perhaps rejig its portfolio of FX reserves away from US treasuries?
Oh, again, a very interesting question. And to be very honest, I mean, the way we are looking at few things is one, there has been a strategic shift, from the central governments or central banks towards having gold and silver in terms of their arsenal as well, from a reserves perspective, which is why one of those reasons why incremental buying from countries like China and India has resulted into pretty high prices into the precious metals. Lastly, I think from a currency perspective, I think it is always being a diversified basket will continue to happen. But my sense is basically that as soon as we near or approach towards a potential trade deal with the US, I think those are the issues which will be there on the negotiating table, which eventual outcome will only come to know post that. So let's wait for some time to have a final conclusive kind of inference from there.
And what if we have to wait till the end of Trump 2.0?
Quite possible. Purely, we never know that, in what form, and fashion the deal kind of happens. It's from what we see from the local standpoint is that it's not that India is in a much of a hurry to kind of enter into trade deal purely because one of the contentious issue here is the agriculture produce. And in our view, I think it's going to be a very big political mistake if the current dispensation kind of has that on the negotiating table for them. So I think the government will hold on to any pressure tactics on or pressure on opening up the agriculture sector from that perspective. So my sense is basically it'll happen. It'll happen in piecemeal basis. Over a period of time when both of the sides are kind of quite happy to progress in a path forward. So it's important for the top two leaders to kind of speak and get it going.
Analysts, experts perhaps are not as worried about the depreciating rupee, but the market perhaps responds differently. So in that context, the market's perspective, are you worried about the rupee? Is there anything also to reduce the pressure on the rupee that you foresee?
See, I think, one thing we should notice is basically till the time we have a current account deficit and you are persistently buying oil as a commodity from a global perspective, rupee, on a gradual basis will keep on depreciating till the time you have a fantastic manufacturing sector, robust manufacturing sector, which is kind of exporting. Now, having said that, it's a very typical trend. And if you date back to history, the rupee has depreciated on an average of close to about 3 odd percent, on an annual basis in that sense. Now, the trend also is that in 1 year you will see a sizable depreciation, and for the next 2 to 3 years, you see much stabler rupee. What we have seen in the last year, or probably we are seeing currently or witnessing here, I think it's that accelerated depreciation which we didn't see. As Geeta also mentioned on the tidbit which you kind of ran. And my view is basically that for the next 2 to 3 years, I think from a foreign investor perspective, I think I would really lap up to the opportunity when rupee is depreciated, and then I can bring my dollar into the investments, at a depreciated level. In the wake that the next 2 to 3 years, the rupee is going to be quite stable. So I'm not seeing anything different from what it's already happened, over the longer period of time in history as well. So this trend probably continues.
Okay, so when do the foreign investors jump back in? When the rupees are 94, 95, I don't know. Just give me your perspective on that in the context of another thing. I believe that you've mentioned this in the past. 5% or so depreciation of the Indian rupee, depending on the timeline that you look at. I know you said 3% against the USD, but it has depreciated 12%, nearly 12% against the Chinese renminbi. Can you tell us how the market should consider that aspect?
No, of course. I think at this point in time, I'm going from a USD perspective and not comparing with China in that sense, purely because China, the whole structure of an economy from a trade perspective is extremely different. Secondly, while depreciation is something you should probably consider, and probably 91, 92 are the levels that you have already seen some sizable depreciation. In addition to that, I think my more focus would be the revival of earnings, which is coming on back of the GDP growth, which we have seen in the last 2 to 3 quarters. If earnings kind of revive, go to 14, 15%, going to grow up in the next 2 years with almost 14 to 15-year low ownership of FPI, there is a possibility where, if things go well, then there can be crowding in of FPIs into India during some part of the year. Now, when does it happen? I'm not sure whether it takes 2 months, 3 months, or 5 months. We are not sure. But in all our calculated forecasts, my sense is that earnings are, reviving, and that is something which markets generally love.
Okay, two quick questions. One, you'll just need to give a number. Near-term outlook for Nifty, but also Geeta Gopinath said that pollution is a greater threat to India's economy than tariffs. Do you think the market agrees?
Unfortunately, the market doesn't agree from the second point, purely because pollution is going to be the case till the time you are looking for an accelerated growth path. That doesn't mean that steps are not being taken to kind of curb the pollution. I think marrying both of them in a very balanced way is going to be the trick of the trade, and which is where the government is putting huge amount of effort to do that. They don't want to forego the growth, but at the same time are equally concerned, including the government, including the judiciary, and the overall citizens as well. So I think that is an issue which is getting tackled, at the highest level, from a government standpoint. So that's on the pollution. But with respect to the Nifty, my safe assumption would be if the earnings grow by anywhere between 13 to 15% for the next 2 years, we have corrected in terms of the valuation on an absolute terms and on relative terms vis-a-vis your other emerging markets. I wouldn't be surprised that we should be following at least the earnings growth trajectory in terms of the movement in the Nifty, which means if the earnings are going 14% in 2 years, then probably 30 to 40% is something which we may probably look at in the next 2 to 3 years in terms of our Nifty performance.
All right. Thanks so much for that. I know that you've also already said that there could be an ugly drop for base metals. And when we get you back, we'll talk about that. Vaibhav Sanghavi from Ask Hedge Solutions. All right. We're taking a short break. Indian markets have joined the